Finance meeting of December 18th, 2025. Well, in compliance with the half-hour rule. Please stand if you're able for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Walt, could you please take a roll call?
Yes. Frank DeCristofaro. Here. Sarah Inamorado.
Present.
Kimberly Joyce.
Here.
Jennifer Liptak.
Here.
Corey O'Connor.
Amy Wise here on behalf of Corey O'Connor.
Sarah Roca.
Here.
President Brusslers.
Present. Are there any public comment?
There is no public comment.
All right. President's update. Earlier this morning, we had a working group on plan funding and modernization meeting. And immediately preceding the session, we had an executive session regarding investments in the budget.
And potential litigation.
And potential litigation. Next, we have board approvals. Walt.
The first item on the agenda is a motion to approve the board meeting minutes from the November 20th, 2025 board meeting.
Do I have a motion?
Motion.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye.
Aye.
Any opposed or abstaining? Seeing none, the motion passes.
The next item is a motion to accept the financial statements, which include the pension fund assets, the statement of changes in plan net assets, and the RBAC balance sheet for October of 2025.
Do I have a motion?
So moved.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye.
Aye.
Any opposed or abstaining? The motion passes.
The next is a motion to approve the December invoices totaling $32,851.23.
I think we just did that. Did we just?
I did the statement of plan net assets. This is the office invoices.
Okay.
Motion.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye.
Aye.
Any opposed or abstaining? The motion passes.
Next item is the applications. This is a motion to approve the following December 2025 applications. There were 2 early voluntary, 6 full retirement, 1 payment plan, and 2 recalculations.
So moved.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor?
Aye.
Aye. Any opposed or abstaining? Motion passes.
Okay.
Next, we have our director reports. Director Szymanski.
Thank you very much. If you turn to the Director's Report tab in your board books, I'll highlight some items on the dashboard. Retiree payroll is up 4.27% from last year. Total payroll is, for the prior month ending, was $12.2 million. Contributions are up 5.88%. Life insurance claims are up 11.72%. And if you scroll down, I have the active pays and deferred vested members that are in the plan, totaling 13,002 at the moment. If you turn to the next page, total retirements on the year were down 3.94%. Pension estimates are up. Now it's finally showing, compared to last year, since we've had the software running with the calculators, a little bit more accurate on the pension estimates. The cash account is listed here. The liquidity fund was totally liquidated, so that'll no longer be reported. There were no capital calls processed as of the prior board meeting in the last month. And then the office budget is there as of November 30th, 2025. I'll report back in February what the final budget was for 2025 once those books close. Are there any questions on the dashboard? Okay, so now we'll move to board approvals. The first motion will be a motion to approve the 2026 budget for the retirement office.
So moved.
Second.
Hearing a motion and a second, is there any discussion? Should I read into the record the total amount of the budget?
Oh, yeah, I can do that too. Let me pause. So the total amount of the budget will be $2,414,516.56, and it's a 2.48% increase over the 2025 budget.
Any questions or discussion? Seeing none, we'll call a vote. All in favor, say aye. Aye. Any opposed or abstaining? Seeing none, the motion passes.
Okay, the next item on the agenda, thank you. The next item on the agenda is a motion to approve the 2026 board meeting dates. So follow the same schedule as 2025. February 19th, 2026, March 19th, 2026, May 21st, 2026, June 18th, 2026, August 20th, September 17th, November 19th, and December 17th of 2026, all taking place in the Gold Room at noon.
Motion?
Second.
Hearing a motion and a second, is there any discussion? I'll just note that, like this year, this calendar has that there's no meeting the first month of each quarter, and then we meet the second and third months of the quarter. Typically, in that second month, we'll receive an asset quarterly update from Mariner, and usually in that third month, we'll receive some sort of update from our actuaries. So, any other discussion? All in favor? Aye. Any opposed or abstaining? The motion passes.
Thank you. Next item is a motion to extend the Snyder Downs contract at amount of $3,500 per quarter, same rate as 2025. This is for programming and tax assistance with the pension software.
Motion?
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes.
The next item is a motion to extend the Coriax maintenance contract for portal maintenance and pension software maintenance. This is for 2 years at $200,000 per year for the years 2026 and 2027. That's the same cost as it currently was for 25.
Do I have a motion? Sorry.
Make that motion.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor?
Aye.
Any opposed? Motion passes.
The next item is a motion to approve the renewal of the fiduciary liability insurance for 2026. This would be at a cost of $56,138. The 2025 amount was $54,913.
Do I have a motion?
Motion?
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes.
All right, so next I have a few board updates. In January, the staff will be visiting the jail on January 14th. We're going to run estimates and go over retirement information and questions for the jail guards and staff. We're going to be working on printing the 1099s. In January, we'll anticipate that they'll go out the week of January 19th. Retirees have begun to use the new online portal. ACRO were the first group to use it. We'll start sending out login information in waves starting in the first quarter, because with about 5,500 retirees, and they're going to work our way backwards, about 300 to 400 a quarter from who retired by date. And then lastly, the following contracts that are expiring in 2026 are Duncan Financial they're our wellness consultant, Phase 14 is our disability consultant, and Mariner's our financial consultant. So all contracts are expected with the current process to be RFP'd, and I'll come back to the board in February with an official schedule when the rollout will be on those.
Great. Anything else or any questions for the director? Thank you.
Thank you.
Next, we have our solicitor, Brian Gabriel.
Thank you, Erica. The solicitor's report is current as of December 11. Thankfully, no significant developments in the past week to report outside of that. There is an action item which is referenced in the agenda generally, and if you look at the solicitor's report on page 2, under contracts, number 2, subsection B on hearing officers, we do have a recommendation as to returning hearing officers and 2 new hearing officers. And just as a reminder, the hearing officer agreements have been done annually. This proposal has 2 of the experienced kind of tenured returning hearing officers having a 3-year contract. Now, these contracts are not contracts that require anything until or unless services are provided. So the hourly rate for attorneys as hearing officers is $250. It has been that for many years, and it will continue to be that with these agreements. So they sign the agreements and then they're available. And in terms of our use of hearing officers, it really just varies. It's somewhat random. To use this past year as an example, I think we had 2 appeals. Only 1 went to a hearing process. A year before that, or maybe a year before that, there were like 5. So you can have 1, 2, 3, 5, just depending upon the year. But under this recommendation, there would be a total of 4 new hearing officers, 2 who are returning and 2 new ones. The recommendation for a motion to reappoint hearing officer Floro is the first listed there. So we should probably go one by one if that works for the board.
Yeah. Can I have a motion to reappoint hearing officer Gianni Floro for a 3-year term beginning on January 1st, 2026?
Motion?
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor?
Aye.
Any opposed or abstaining? The motion passes. Next, we have a motion to reappoint hearing officer Gatens, Tucheri, and Nicholas for a 3-year term beginning January 1st, 2026.
Motion?
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor?
Aye.
Any opposed or abstaining? Motion passes. Next, we have a motion to appoint Candace Reagan Esquire as a hearing officer for 2026.
Motion?
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes. And finally, we have a motion to appoint Dana Adipietro Esquire as a hearing officer for 2026.
Motion?
Second.
Hearing a motion and a second, is there any discussion? All in favor? Aye. Any opposed or abstaining? Motion passes.
Thank you. I have no other items to bring to the board's attention, but I'd be happy to answer any questions.
Should be Italian.
I'm a little bit Italian. Any questions for Brian? Thank you.
Thank you.
Next, we have our consultants from Mariner Institutional, Chris Brokaw and Tim Walters.
Thank you. We have one item that we want to address, and that is the consent for the Fourth Amendment to the limited partnership agreement of the iNetworks Opportunity Fund. iNetworks is requesting that the board consent to a 2 or 3-year extension to the agreement. In consultation with the solicitor, we determined that the agreement itself provides for the general partner to continue to manage the fund through liquidation. Therefore, this extension, we believe, is not required at this time for the general partner to continue to manage the portfolio through to its liquidation as a fiduciary of the fund. So we do not recommend consenting to this amendment for the extension.
May I have a motion to deny the request for consent to extend the agreement for iNetworks Opportunity Fund 1?
And if I can add one more thing,
Please.
Excuse me. We've been informed by the general partner verbally that they do have enough votes. The other limited partners have voted to approve the extension.
Thank you.
Thank you.
Do I have a motion?
Make that motion.
Hearing a motion and a second, is there any further discussion on iNetworks Opportunity Fund 1? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes. Thank you, Mariner.
Thank you.
They're taking their name signs. Next, we have up our consultants from Acrisure, Brad Rigby, Todd Kordecki, Amanda Volk. It looks like at the table we'll have Amanda and Brad.
I know, you need your name. Okay. We have 2 things to go over today. So if you flip to our section of the report for Acrisure, we'll be going first over the interest rate that'll be used in 2026 for employee contributions to accumulate them with interest. And then we also have our full 2025 valuation report as well. So we'll first go through quickly the refund rate and how that was determined for 2026. So if you flip to page 2 of our report, this gives you a graphic to just basically show you how interest rates have moved over the past 3 years. The methodology in place, it looks at a trailing 12-month of interest rates to come up with the rate used for the upcoming year. So the brown line is what is used for the refund rate. So if you look at page 3, the refund rate for 2026 we have calculated based on the current methodology to be 4.1233%. This is a pretty big change from last year, just the way the interest rates have moved over the past year. Last year, the interest rate, well, I guess the interest rate for 2025, I should say, is 5.0425%. But if you look back to page 2, you can see tracking the blue line that starting at December last year, December 2024, to where we currently at, rates have greatly decreased. And these rates are based on a 3-month treasury bill is what we track for these rates. So page 3 just outlines the averages that we use. So it takes a average of each month, and then once we get the average for the month, we take the average for the year. So if there's no questions, I think we would just need an approval for the 2026 rate.
Thank you. Do I have a motion to approve the 2026 refund rate at 4.1233%?
So moved.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes. Thank you.
Wonderful. We do have a slide 4 just to show you the history dating all the way back to the 30s in case you're interested, but that's just for informational purposes. So I'll pass now to Brad, and he's going to walk you through the valuation report.
All right, thank you. This is the comparison, our report comparing assets to liabilities as of the beginning of 2025. So it does not reflect any of the positive investment performance that has taken place over the course of this calendar year. Our report is materially different from what we've presented to you in the past. We believe a pretty substantial improvement over the way we presented information before, where we separated more of the technical aspect into an actuarial report and then provided an executive summary that had high-level details. Here we've combined them. So even though I'll point you to a couple of the key results and maybe walk through so you can see when you might look at it later where we have things organized, in large part it does combine all of that information into a single presentation, but then also give you some charts and historical information that we think provides a better picture over the course of maybe the last couple of decades of trends and things that might be seen within both the demographics and funding picture of the plan. So flipping forward to page 3, looking in the bottom right corner of this valuation report, we have here a single page that summarizes key results that we would have previously presented in the executive summary, comparing this year to last year. The current year column, again, as of 1/1/2025. We'll note that we do reflect all of the updated valuation assumptions that we discussed at last month's board meeting, most notably the drop in the assumed investment return, that discount rate down to 7%. The effect of that is to raise liabilities, as do some of the other changes that were put into place. But when we get down and look at some of the key funded ratios, one of the primary drivers of the decrease in the funded ratio is that reduction in the assumed return from 7.75% down to 7% this year. So just comparing certain numbers as of the 1/1, $947.5 million in assets. Again, we don't use a smoothing method here, so it's just a straight market value pulled from the investment statement. Compared to liabilities as of the same period of time, $2.38 billion that you can see right in the middle on that entry age normal basis. That is one where we reflect an allocation of liabilities and pay growth into current service. The unit credit basis below is if we take everybody's accrued benefit that they have now and only reflecting pays up through the measurement date. So you'll see that the 2.38 billion liability reflects the salary growth that's going to be on service already earned. This normal cost right in the middle is a measure of our expectation for the increase in liabilities for work that will occur during the course of this plan year. The substantial increase there is largely due to the change in the interest rate from 7.75 to 7. But still, so we're expecting liabilities to climb by roughly $51 million on top of the 2.38 billion that the plan has at the beginning of the year. Most notably, down in the funded ratios, we've talked in the past about the total funded status ratio because there are components of the second-class county code that drive cost of living adjustments should that get above 110% funded. As of the beginning of this year, it is 60% funded. I think best measurement of the funded position of the plan, which is the liability for service to date compared to assets to date, is the accrued liability funded status ratio that's 39.8%. Right at the top, and that's a decrease from 42.7 last year. Again, in very large part, that decline in ratios due to the change in the interest rate assumption. Any questions on that before we just point to a couple of items?
I may have missed it. You may have said it. The normal cost went up about 2%. Did you cover this? And I blanked out. Is that the salary scale assumption change?
As a percentage of payroll, it's in large part due to population changes as well. There's substantial change in the number of people, and so the benefits earned as a portion of it is going up. But yes, that when the normal cost also goes up and payroll is effectively trending at what was expected, then as a percentage of payroll, yes, the normal cost went up by about 2% of payroll.
But it went up partly because of the assumption change and partly because of demographics.
Demographics, yes.
Was it more of one than the other?
I think it was more due to the discount rate, but there was a little bit of demographics.
I didn't even think about that one. Okay.
Eric, I think half of the increase was for the discount rate alone.
Okay, and then the other half was a split of demographics and the salary scale?
Yeah, I think
change?
about a third were from the other assumption changes, and about 2/3 of the other piece was based on data.
Okay,
data
great.
updates. Yeah.
Thank you.
Okay, flipping through the next couple of pages, you'll see it's summarizing where assumption changes we made for this valuation. We discussed those at the last meeting. If you flip into page 8 and 9, it begins a section where we compare prior results from other evaluations, trending demographic-related items, head counts, age of different statuses of participants in the plan, payroll and benefit levels over the course of time for the various statuses within the plan. Just really largely trying to illustrate trends that we might see. So like, for example, on page 11, something that's notable to us at least is in that second column from the right, average payroll per individual, per active individual. Over the course of the last 10 years, it has increased from what back in 2016 was 48,000 to 2025 census being 66,000. So average payroll has increased pretty substantially. Granted, it's a 10-year period, but that has a material impact on benefits. And that's as an average. So when we see, like happened over COVID, large decreases in population based upon various factors, depending on how the demographic shifts happen, it may be that it is not necessarily the average that is being removed from the population, but maybe lower compensated individuals, which would bring up the average, and that has certainly trended over time. Do we have a question?
Yeah, Brad, just confirming, total cover payroll, that's pensionable wages, not base pay. And so the average payroll per year, that's not just an average of employees' base pay rate, that this is including overtime.
Correct.
Okay.
And I had a question about the titles. So the one says active covered payroll, and the next one says average prior year payroll. Is it just an average of that total, or is it? something different than that?
I think it's an average of that.
Okay.
Yeah. It's not the coming year, it's the average of the prior.
So they're both the average of the prior year? Okay. And did you happen to calculate what that is as an, like an average increase over that time period?
I didn't, but we can get that to you.
I can
Yeah, just
bust out my calculator too.
Yeah. Yeah.
And do you, is this the chart that shows the 2 pages back? I was surprised by the number of the increase in terminated vesteds over the 10-year period on page 9. Is that, do we know why that's happening?
I
Or was it
don't-
like artificially low
don't.
before? Okay,
We can have conversations with
okay,
Walt and get you a better answer to that.
Thanks.
I mean, I think some of it's timing. People have a tendency to, if they're leaving and they're not retirement eligible, they'll take a distribution, refund of their contributions, right? So they don't necessarily hold on to a benefit as much, but maybe there's been a trend to increase waiting for that annuity benefit instead of a refund. But we'll talk
Okay.
about getting an answer
Thanks.
for you. All right, looking at some of the pages that follow, for example, page 12 shows a comparison of assets to liabilities over a period of time. That may be better illustrated a couple of pages forward, but page 13 shows a comparison of investment returns to expected over time. You can see the volatility, which is naturally inherent by being invested in the market. Page 14 provides you a summary of contribution rates on a combined basis over time and how that's changed. 15 shows you a comparison of money coming into the plan by contributions compared to what's going out of the plan in benefits and expenses, specifically non-investment related expenses, just operational. And really net cash flows, plans 50 to 60 million to the negative on a cash flow basis each year. Doesn't necessarily mean that the asset balance is going down. It just needs investments to earn that. And a negative cash flow position makes it more difficult to earn a higher return, which is, we had discussions about that this year and why there was an effort to bring down investment income to a 7% assumption. Page 16 shows you a history of the funded percentages on those 3 primarily funded ratios that we discussed over the course of the last 25 years. You can see that it was last over 100% funded in the early 2000s, 2002, 2003. Back then, the plan did use a smoothing method on its assets and a couple of changes, so it wasn't really until, I think it was 2008, when really everything was level set with a straight market value for the sake of transparency in these. But through various market items that have occurred over the course of the 25 years, you can see the trend in the funded ratio over that period of time. Page 17 shows your history of normal costs. A couple of items have occurred in here that have shifted, really assumption-related items. So for 2021, you see that there is a little bit of a shift upwards in the normal cost from what had been trending over the years prior. That was when we updated for the most recent mortality table at that time. You know, similar here, 2025, we've got some assumption changes that have increased as a percentage of payroll too, and as we discussed, a couple of demographic-related items as well. But then in the pages that follow, page 18, actuarial exhibits, this is where it gets more technical and derives a lot of the liabilities and calculations, separating things out into various pieces of the benefit, determinations of assets and how that changed over the course of the prior 12-month period. If there were any desire to go through this, we'd be happy to, but this is largely a much more technical exercise that helps to derive a lot of the information that's summarized on pages previous.
Are there any questions? I appreciate the new format and the amount of historical information you all have included into it. I know when I think about the work we're doing on the working group, I was like, oh, we're talking about a lot of these numbers, so it's nice to have them here. Thank you. Oh, wait, I've been told to wait.
Yeah, we just need a motion to accept the report, so then that way
Oh,
we can
thank you.
post it.
May I have a motion to accept the 2025 actuarial evaluation and post it to the website?
Make that motion.
Second.
Hearing a motion and a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? Motion passes. I know. Next, we have some, thank you, Acrisure. Next, we have new business, report and recommendation from the Contribution Rate Committee to set the 2026 employee-employer contribution amounts. Member Liptak.
Thank you, Chair.
Could you do your mic?
Thank you, Chair. The Contribution Subcommittee met on December 9th, 2025. It was myself, Deputy Controller Amy Wise, and County Council Budget Director Sarah Roca. We had met with staff present along with our actuaries. We reviewed and discussed updated actuarial projections presented by AccuSure and discussed several other considerations. These included timetable for the plan working group that is going to be complete and develop recommendations, but there's not yet a finality to that timetable. We're still working through it. But there, as well as that, there are concerns about increasing the contribution rate of employees overall. So those two factors and considerations factored into our recommendations. The working group that is still going on, and also the contribution rate as it relates to our employees in there particularly. After weighing and discussing these and other considerations, the subcommittee recommends the board maintain the current contribution rate for 2026, which is 22%, which is a combined 11% pay for the employer and 11% for the employee. So with that, there's no questions. I will make the motion to set the contribution rate for 22 combined, which is 11% employee and 11% employer for 2026.
We have a motion. Do we have a second?
I'll second that.
Hearing a second, is there any discussion? Seeing none, all in favor? Aye. Any opposed or abstaining? The motion passes. Thank you. Thank you, Member Liptak and the Contribution Rate Committee. Our next meeting will be held on February 19th, 2026. Is there any other new business? Seeing none, I don't know the adjournment procedure. Do I have a motion to adjourn?
So moved.
So moved. We are adjourned.
Wish everybody Merry Christmas.
Oh, and Merry Christmas and Happy New Year from Member DeCristofaro and myself.
What do I get to